Ladies and gentlemen, welcome back. Today we are diving into the exhilarating realm of the book Trading in the Zone by the brilliant mind Mark Douglas. Please watch to the end where we will reveal his 7 principles for trading consistency and some of his tips to remove emotions when trading. To help traders bridge the psychological gap and embrace risk and uncertainty, renowned trading psychologist Mark Douglas offers 5 fundamental truths. 1. Anything can happen. In the realm of trading, no outcome is guaranteed, and unexpected events can significantly impact market dynamics. 2. You don't need to know what will happen next to make money. Profitability in trading comes from identifying opportunities based on probability, not from predicting the future with certainty. 3. There is a random distribution between wins and losses for any given set of variables. Wins and losses are not evenly distributed, but follow a random pattern over a series of trades. 4. Entering a trade is an indication of a higher probability of one outcome over another. Each trade is a calculated decision based on the trader's analysis, indicating a higher likelihood of a particular outcome. Every moment in the market is unique. The market is in a constant state of flux, and each trading opportunity is distinct, requiring adaptability and flexibility in decision-making. By fully embracing these fundamental truths, traders can shift their perspective and approach the market with a probabilistic mindset. They understand that trading success is not about being right all the time, but about managing risk effectively and executing their strategy flawlessly. In the fast-paced and ever-evolving world of trading, where fortunes can be made or lost in the blink of an eye, every trader approaches the market with a singular expectation: to make a profit. This expectation is the driving force behind their every trade. After all, why would they bother participating in the volatile world of trading if they didn't believe they could come out ahead? However, seasoned traders are not blind to the fact that with every trade, there is always a chance of being wrong. They are acutely aware that the market possesses an element of uncertainty that can lead to unexpected outcomes. It is in this recognition that the true nature of trading lies. When a trader experiences a string of losses that goes against their positive expectations, a surge of emotions can arise. Anger, disbelief, and even despair can grip the trader's psyche as they feel as if the market is somehow conspiring against them. It is in these challenging moments that the true test of a trader's mindset and resilience emerges. On the other hand, professional traders, those who have honed their skills through experience and discipline, approach the market with a different perspective. They embrace the reality that trading is a game of probability and that both winning and losing streaks are an inherent part of the process. Please remember to watch to the end where we will reveal Mark Douglas's 7 principles for consistency. Professional traders understand that losses are not to be seen as personal failures or setbacks, but rather as necessary expenses that come with running a business. They view each trade as a calculated decision based on their strategy, which they believe has an edge over the long run. They know that, while individual trades may result in losses, their overall strategy is designed to yield positive returns over a large number of trades. This perspective allows them to maintain a sense of composure and focus, even in the face of adversity. However, not every trader fully accepts or even entertains the thought that a trade could result in a loss. There exists a psychological gap between assuming the risk and fully embracing it. This gap can hinder a trader's ability to navigate the ups and downs of the market effectively. The most successful traders in the world understand the importance of bridging this gap. They recognize that every trade is an independent and random event, devoid of any connection to past trades. They have learned to accept the uncertain outcomes of each trade and remain undeterred by a series of losses. Their mindset is rooted in the understanding that the market is unpredictable, and success in trading comes from embracing this uncertainty. Trading in the zone, as described by Mark Douglas, is a state of mind where traders are not burdened by fear, doubt, or compulsion. It is a state of being where they trade with confidence, yet remain grounded and realistic. Achieving this state requires eliminating the potential to interpret market information as threatening and genuinely accepting the associated risks. To develop this mindset, Mark Douglas provides 7 principles of consistency. 1. Objectively identify your edge. Traders must identify the factors that give them an edge in the market, whether it's technical analysis, fundamental research, or a combination of both. 2. Predefine the risk of every trade. Establishing predetermined risk parameters ensures that traders never risk more than they are comfortable losing on any given trade. 3. Fully accept the risks associated with trading. Recognize that trading carries inherent risks and losses are an inevitable part of the process. 4. Execute your trading strategy without hesitation. Stick to your strategy and avoid second-guessing or impulsive decisions based on short-term market fluctuations. 5. Take profits when the market allows. Capitalize on profitable opportunities while remaining disciplined and adhering to your exit strategy. 6. Continuously monitor and correct errors and bad habits. Actively seek to improve your trading skills by identifying and rectifying any recurring mistakes or counterproductive behavior. 7. Understand the absolute necessity of these principles and never violate them. Recognize the importance of these principles and commit to following them consistently. Mark Douglas emphasizes that trading errors often stem from attitudes towards being wrong, losing money, missing out on potential gains, or leaving money on the table. These attitudes hinder the trader's ability to enter the zone and trade with a carefree state of mind. By embracing these principles of consistency, traders can develop the mental fortitude necessary to overcome these psychological barriers. Successful traders understand that trading is not about eliminating risk, but about embracing it and managing it effectively. They acknowledge that every trade carries an element of uncertainty and that losses are an inevitable part of the process. By adopting a probabilistic mindset, traders can navigate the market with confidence and composure while staying true to their well-defined strategies. Ultimately, trading in the zone requires a carefree state of mind where traders are undeterred by losses, but remain focused, disciplined, and adaptable. By understanding and accepting the fundamental truths of trading and by adhering to the principles of consistency, traders can cultivate the mindset necessary to thrive in the uncertain world of trading. According to Douglas, once you acquire the ability to accept risks in trading, the information produced by the market won't be able to trigger any painful reactions that you personally define or interpret. When the market generates information that doesn't have the power to evoke emotional distress, there is no need to avoid it. Instead, it becomes mere information that informs you about the potential outcomes. This approach is referred to as an objective perspective, where your judgment is not influenced or distorted by fears of what might or might not occur. Quotes from Mark Douglas. Quote 1. The most successful traders exhibit fearlessness, which stems from cultivating mindsets that provide them with optimal mental adaptability to enter and exit trades based on the insights they gather from the market regarding its potential outcomes. Simultaneously, these traders have developed attitudes that safeguard against recklessness, ensuring they maintain a disciplined and responsible approach to their trading activities. Quote 2. If your goal is to trade like a professional and be a consistent winner, then you must start from the premise that the solutions are in your mind and not in the market. Quote 3. When you achieve complete acceptance of the uncertainty at each edge and the uniqueness of each moment, your frustration with trading will end. Quote 4. When you genuinely accept the risks, you will be at peace with any outcome. Quote 5. When you really believe that trading is simply a probability game, concepts like right or wrong or win or lose no longer have the same significance,